Hi everybody, it's Wednesday, so let's chat. And I'm Kanan Chandran, I'm the publisher of stormasia.com, the presenter of the Wednesday web chat series. It's a 45-minute web chat which takes place every Wednesday from 12:45 and discusses a variety of topics. You can check out our previous sessions on the stormasia.com, that's storm-asia.com. Now, this session is also about you asking us questions, so please feel free to ask the questions in the Q&A section. And for today, we are looking at raising funds for your business. I think many of you would have been at home for quite a bit, had a lot of time to think about what you want to do. Some may want to consider a switch in career, some may want to do something they are passionate about. So they might have come up with a brilliant idea. Now, can you monetize that? Can you get somebody to be part of the journey with you and build on your idea? So we've got two people two entrepreneurs who've done that and done that very effectively. So I've got Joan Ong, who's a founder and CEO of welovesupermom. Joan launched welovesupermom.com in 2013. And it's Asia's largest online marketplace and community for parents, babies, toddlers, and kids. The ongoing pandemic has helped her business as mothers are now accustomed to buying products online without having to touch and feel, especially for established brands. welovesupermom is a company of the Locan Venture Accelerator ecosystem. Welcome, Joan.
Thank you. Thanks for having me.
And we have Mike Hagbeck, who's the Chief Executive of StorHub Self-Storage, Space Next Door, and Storage Self-Storage. Michael hails from Australia, and when he arrived in Singapore in 2001, he started Storage Self-Storage following a successful 2-year stint with a startup, a wine storage company in Sydney. Michael's business has since evolved and expanded to 3 companies, which encourages Singapore and Space Next Door, which is the most recent one, encourages Singaporeans to lease out idle space. Challenges aside for startup ventures like bureaucracy, technological hitches, and legal issues, Michael wants to max out every centimeter of empty space in space-starved countries. So welcome, Mike, as well. Welcome, Joan. Welcome, Mike. For both of you, this would have been very different journeys that you've taken. So maybe, Joan, if you'd like to start, could you tell me what prompted this journey into this welovesupermom?
Okay, so a lot of entrepreneurs, when they start a business, is always start from something they are passionate about. So it's the same for me. I have been in the corporate world for a big part of 15 years. After I met my first child in my mid-30s, I decided to, it's like to leave the corporate world and do something that I would enjoy. And at the point in time, I really want to advocate, it's like parents raising healthier and happier child, and not just a child who actually strive in the academic world. So this is something that I was very passionate about. So I started a community, I started seminars, I invited international authors, international doctors to actually educate parents. And in the first year, it was already very, very successful. So I guess I managed to find a problem in the market, and I offered solutions, and it just took off from there. Yeah, so that was how it started.
So that was convenient. You found the gap quite quickly and plugged it quite effectively.
Yeah,
Great.
yeah.
Mike, what was your journey?
So my journey was kind of lengthy in a sense, but I had joined a self-storage company in Australia, and I thought, oh, it's an interesting business. But I'd been to Singapore, and I'd seen how squeezed up for space people in Singapore were compared to Australia especially. So I thought actually there's actually an interesting opportunity here. And originally I was thinking for wine storage, but then I expanded it into more general self-storage. And having, the more I saw of Asia at the time, the more convinced I was that, it's a good idea. So I relocated up to Singapore early in the early 2000s to follow up on the idea.
Okay, so in your case, it was very physical, right? I mean, you need a physical space for people to store things. And in your case, Joan, it's purely online, right? Everything is online.
Yep.
So
we started off offline,
okay.
but over the years, we have started to move a lot of things online, which is good because it's that with the COVID-19, we were prepared. You know, it's that our business is not so affected because it's that we have actually progressed online quite a bit.
Okay. So in your case, the things that you've moved online, would you bring them offline again at some point, or are you just very happy with it as is now and probably continue moving more things online?
I think is that we believe a lot in online and offline integration. I mean, it's that even though online has actually moved a lot, which is good, but we also believe in the offline elements because it's like when the COVID is over, parents need to come together. They need to gather. They need to share tips. The face-to-face interaction of people cannot be removed, right? So we also believe a lot in omni-channel. So even though we actually have a very large marketplace, we also work with retailers to support them with their offline sales. So yeah, it will be an online offline integration.
So it's a combination of the two. Mike, yours is a bit hard to go offline. You still need physical space to put stuff. Maybe when Joan does some offline stuff, she might need some of your space.
Yeah,
but
for sure.
So the proposition for you would be very different. You'll be looking for different types of investors, I would think, right? Because Joan, when you were looking for somebody to invest in what you had started up, you were probably looking for a technology type investor. Correct me if I'm wrong, please. And Mike, in your case, you needed somebody who had worked with property and and all that, and real estate and stuff like that. So if that's a correct assumption, could you tell me what were the processes that went through your mind in terms of trying to identify a group of potential investors? Maybe start with Mike first.
Sure. Well, mine's slightly complicated because actually it's a property business, but also a business like a retail business on top of that. So in a sense, we're retailing space to people. So looking at property investors, you also have to find the ones that get the idea of, okay, there's a business on top and there's marketing problems and HR problems. So I needed to find investors who also understood business aspect as well as just the property. So, I kind of over the years, I've spoken to a lot of investors. And there's always the question, is it a business? Is it a property? Where does it sit on the spectrum? So it's like, well, it is obviously it's a property business, but we're kind of towards the middle of it. So then you're looking at guys who have sufficient money, and with property, sometimes it takes a few years for the property to stabilize. So you need to find investors with a reasonably lengthy time frame. At the same time, the investors I end up speaking to, most private equity investors, they typically have like a 5, 7, 10-year time horizon. So with our business, you're really getting your money back after 5 years. You don't want to be trying to sell then because then there's no profit. So then, you're kind of ticking the boxes. Does the investor have this, this, and this, and this? And a lot of that's learning. I mean, I had an investor, we did quite well, but they only had a 5-year fund life. So we had to stop after 3 years to stabilize the business for the next 2 years so that they got the price they wanted. So understanding, what the investor wants to do, how long they can be invested, making sure they understand what you want to do, tends to kind of limit the number of people you can talk to quite a lot. So it means learning for me, trying to talk to the wrong investors with the wrong pitch a lot of the time. But, the more you do, the better you get.
Okay. How about yourself, Joan?
Yeah, for us, right, we don't specifically look for investors in the tech space. We look for investors who believe in what we're trying to do, right, and then can help us grow to the regional market. Because we have been cash flow positive, so we can afford to be a little bit more picky who we want to actually get as investors. So we look for investors who actually has regional portfolios, who can actually connect us with the right people, who can connect us with the right partners to assist us with the growth, and also believe in what we are trying to do, right? I think that is very important, because it's that if you're actually getting investors who just want to get you to the certain valuation and certain milestone, but at the end of the day, it's not aligned with you in your mission and the vision, it can crash a company, right? So we need investors who believe in the founders, the management team, and also the vision and mission, and also to be able to be understanding, to give us the space, you know, it's like to try what we want to try, and then to fall, to fail, you know, it's like, and this is part and parcel of a process of growing a company. Yeah.
How many investors did you go through before settling on the one that you did?
Okay, so as of now, we are actually in the we have actually concluded our pre-series A fundraising. We didn't go through a lot. Maybe it's like 8 to 10. Generally is 50 to 60% of them will actually is come in and say that, look, I want to be part of your journey. So before we actually speak to these 8 to 10, we actually do a background check, you know, to actually have some understanding is how they actually handle their portfolio companies, what kind of support they give, you know, whether they're regional. So if we think that they are the one that we want, then we will actually is like have this conversation with them.
Okay. Mike, how many did you run through?
Well, I guess since I first started 20 years ago, probably 50, I would say, that I've spoken to. Over the last 2 years, I should be a little bit more discerning, but probably about 10 significant investors. And yeah, I mean, it is quite a challenge. Like, you got to find them first, and you got to kind of persuade them second. But at the same time, by speaking to more investors, you kind of, you know, get different feedback from people, what they like, what they don't like, and you can, you know, adjust your pitch, adjust your business plan as you go through. You also understand, you know, some investors really like the business part and want the higher return. Some investors like the property part and they want a lower return. So it is actually, it's very time consuming and heartbreaking at times, but at the same time, that process teaches you a lot and improves your whole fundraising pitch a lot as well.
How do you guys tackle rejection? I don't think Joan has had much rejection in her proposals from the sound of it, but how would you tackle rejection if you keep, you know, coming up with people saying, nah, your idea doesn't work?
Me?
Yeah, I know this might be quite a hypothetical question for you.
Oh, okay. I mean, it's not that we don't have rejections. We do have rejections, but sometimes we just have to understand the rejections. You know, everyone look at things differently. So, you know, I would like to believe that it's very important for us entrepreneurs to believe what we are driving, what we are getting. Not everybody can see eye to eye with you, right? And it's okay they don't, right? So, and if they don't, then it's just unfortunately we cannot be together in this journey. So I guess it's also very important that we find investors, you know, is with the same, how I say, thinking, same perspective. It's just like making friends. You know, you can't be good with everybody, right? So, but the thing is that if you can find some good friends, they become your best friends. So
especially if they help you make money.
Yes, exactly. So it's also encouraging to find people who believe in what you do, and then being able to you yourself believe in what you do. So I know Mike is I understand there is some investors who say no, you know, after you're talking to them, it might affect your morale. It might question that whether you're doing the right things, whether you should adjust your plan. But sometimes I feel that it's very important to stay on what you believe in the first place, right? And then just finding people who believe in you.
Okay.
Yeah.
Mike, how about, what was that like for you?
I guess I kind of agree with Joan that you got to take it as a learning opportunity. You get the feedback. Some investors, I mean, I was going to say they're dumb, but I shouldn't say dumb, but they just don't really want to think like laterally. They just want to look at the numbers and then they make a decision without thinking too hard about stuff. So those ones, you shrug your shoulders and move on. You know, and if you go through this exercise, you get rejected, but you still feel that, you know, the idea has merit, then, you know, keep on going. You know, it'd be dreadful if you had an idea and you gave up and then somebody else did that idea and they did it successfully just because you gave up. So I'd say, yeah, I mean, rejection is hard, but also, you know, don't rely on one particular investing option because there's always a failure rate. So you know, I would say to people, don't be shy about talking to 2, 3, 4 people at once, because you just don't know who's going to come through at the last minute.
I'm just wondering, you talk about passion in whatever it is that you're trying to do. Joan, in your case, it came about because you had a child and you sort of plug the gap. Your child will grow up, your interest in that area may reduce somewhat. So how do you intend to continue the brand with the same level of passion if you're not sort of directly invested in it, as in having a child with all those issues?
You actually have made a very good point. So along the way, right, I mean, definitely my child has grown up. Now he's 9 years old, right? But I guess is like what actually motivates me is whether I'm developing a product that people are using, right? So that is a validation of your hard work, validation of your struggle, validation of a lot of things. So it's like along the way when we actually develop products, we see, wow, the take up is so high. We start seeing it's like parents say, good job, supermom. We start seeing it's like a lot of people joining our community. We see our platform taking off. All this little success keep me going, right? So and then you already and then this project become your another baby, right? So beside the real baby, you actually have another baby that you have actually as I give birth to, and then you want to see it grow. Yeah. So a lot of times it's like you just want to make sure that it succeeds. Yeah.
Would you at any point want to consider handing it off to somebody? I mean, are you in the process of building something to sell, or do you want to stay with it?
As of now, we're building our management team. So I have a few core leaders who have been with me since the start of the journey. So it's definitely is something that we're trying to build to actually hand over to the team who has worked very hard for the last many years. Definitely it will come to a point in time whereby I'm it's I cannot think as fast. It's like I could have lost touch with the tech bit. So but right now we are very focused on building up a sustainable team structure. So whether we sell or not sell, currently that is not something that we are really thinking about. But it's like where we want to bring this company to over the next 5 years, right? And of course, it's hopefully by the end of 5 years, we have grown to a stage whereby we actually can answer to the investors who invest in us at this stage that say that, look, your valuation has gone up so much.
So are you looking at a listing or something of that sort, or are you just happy to let it run as an entity by itself?
So currently our focus is driving growth of the company. When 5 years come or 3 years come, then we will consider the different options available on the table. Yeah. Okay.
Do you have a strategy to widen your scope of products and services?
Definitely. We actually have a pretty large product team that we have built this year. So even though it's a COVID period, we are hiring people. We're hiring tech people. We are also hiring different business level people. We are working with NUS to develop our products, and we are looking to scale overseas hopefully by next year. So we are looking to grow our consumer level as well as our tech level.
Cool.
Right, yeah, so we are still in the growth stage. So it's we have not come to a point whereby it's like we'll decide okay, we want to exit. No, it's like I feel that I think our focus right now it should be developing a product that fit what consumers are looking for and growing it overseas.
Okay, cool. Quite ambitious. Mike, you've already gone into the regional space, right? What are the challenges that you've seen and faced trying to talk with different groups of investors in different markets?
I guess one of I guess with our business challenges, well, the multiple challenges, one challenge is buying property in Asia requires money, a bunch of money. So, you need to find an investor with that scale for a start. And some investors actually want to invest even more than you originally started off with. And then to do that, you actually need to go regional. So then you are looking at, well, how do I learn about the property market? How do I learn about consumers here? Who's going to run this thing? If we're going to invest $40–50 million in Korea, for example, who's going to look after that? Because I can't bounce backwards and forwards every day. So expanding your team, then, there's cultural issues, control issues, performance issues. it becomes very, I guess, quite granular in a sense. There's lots of small issues that or details, if you don't get them right, your performance is going to suffer. So, and then if you want to go to Japan and then China and then Hong Kong, you're just multiplying that, that challenge, several times over. We are figuring it out. I mean, we have almost like a partnership structure. So we have a CEO in China who's very capable, actually established that business several years ago. The guy we hope will come work for us in other markets, the guys I should say, have lots of experience in those markets and will be shareholders in the business. So the ownership will be there. They have experience with property, they have experience with business. They're people that I've known for a long time as well. So in a sense, we have the relationship there. So that's, I guess, the softer side of it. The harder side is, we just keep our finance team in Singapore and they control the money, to be really blunt about it. So if you can control the funds, what's in every bank account, what's getting spent, then, from a heart point of view, you feel comfortable knowing that everything is where it should be.
Okay. Is that a similar philosophy for you, Joan, in terms of how you would look at your regional expansion?
Yeah, pretty much. I guess it's about might say it's quite spot on for all entrepreneurs. It's all the issues, all the challenges, and all the strategy. Yeah, it's pretty similar process.
Would you go with a similar pool of investors, or would you look at different investors in different markets?
I think we are, as of now, pretty open to actually is other pool of investors. Our investors right now, even though they actually have a regional outlook, but it doesn't hurt, it doesn't harm to actually have a local investors that focus on a local market, right? That might actually help you expand faster into that specific market.
So for the two of you, I'm just wondering, what was your objective? What was your dream when you started? And at this point, has your dream sort of kept up with reality, or has reality exceeded your dream, or are you still trying to chase that dream?
Wow. I think for me, I guess the dream was probably a bit unrealistic, but I figured in 5 years I could have a business that was all the way across Asia, super successful, and then I could relax. So, actually doing it, you realize how unrealistic that is, just from, fundraising and scale. And also people don't even know what our product is in most places. So the acceptance is not there. But I would say now, probably over the next couple of years, we probably, with the partners I have and the direction we're going now, probably getting close for me.
Getting that. How about yourself, Joan?
Yeah. I guess I started out with the dream of, it's like doing something that touched millions of parents. Singapore is very small, so I can't fulfill my dream in Singapore. There's only 30,000 births a year and it's still going down. So to fulfill my dream is there's a need to actually venture out of Singapore, right? And that is difficult. But I guess it's like we have amassed a very good team of board of directors, advisors. We have Ko Boon Hui, is like who is our advisors, giving us advice at every point of our journey. We have
Did you choose Boon Hui, or did he come looking for you?
It's through connection, and he loved our idea. So it was actually that this was a very amazing pitch. It's just after we pitch, and then he basically asked how much you want. That was so I mean, he loved the sector. He believed in the sector. He believed in our mission and vision, and it's great to have someone like that who follow you. And then when we raised our second round, he joined the second round as well. So that is quite encouraging. But of course, we have funds who actually one particular fund who actually sent us a term sheet, and then it's like within 1 week we drew the term sheet. Okay, so you have cases like that, right? So but you just have to take it in your stride as you move along. And we have Karen Ko, who is actually board of director of HSBC. It's like she's also opening up doors for us and things like that. So slowly but surely we hope to get near to our dream. Yeah.
So when you're choosing an investor, do you choose somebody with the money or with the connection? Which is more important?
Firstly, you need to have money to invest in us.
No doubt.
But secondly, is definitely the connection is very important, right? Then you know, is we typically will ask the fund, you know, it's like who can you link us up with? You know, it's like you know, it's like how can you help us with certain markets? How can you help us in different ways? Because it has to be two-way, especially in this stage of our development.
Okay.
Yeah.
How about you, Mike?
Primarily, it's the funds. With property, generally in most of the markets we're looking at, the regulations are pretty straightforward. Well, I shouldn't say straightforward, but they're pretty clear. So having connections, one, probably won't help that much. And two, I guess to be really blunt about it, with US investors, we've got to be extremely careful about government relations. They have lots of compliance issues around that. So our view is just to kind of avoid that completely and just focus on following the rules and just keep going ourselves.
In your respective journeys, was there a particular curveball that caught you unawares and sort of made you rethink a lot of things?
It's always curveballs, I have to say. There's always something coming along.
Which was the strongest pitch?
I think for me, there was a time where I thought I was going to stay on with the business forever, but then I couldn't. The new owners basically said, look, we want to keep it ourselves. So then it's like, you know, you realize if you're relying on private equity type of investors, there's people coming in and out all the time. So you have to kind of, you know, strengthen yourself to the fact that you may not be able to stay with this business that you want to build forever. But then I was fortunate enough now that my current investors have I guess a plan or a preference that, you know, involves, you know, I guess building the business, but then getting other investors, say through the public markets, for example, so that the business goes from being like short-term private equity to, you know, by going public, you do have that longevity. So hopefully if the investors continue to like me, I'll be able to stay on, you know, as long as I want to in that case. So, you know, understanding, it comes back to understanding the investors. You know, investors own the business, they can do what they want, and you might not be part of what they want to do. Especially with the property-based business, I don't have the funds to be majority shareholder, so I just have to work with the other investors that are there. But then I also learned my worth as well and realized the experience and the track record I had was actually valuable to other investors. And there are investors who, you know, they do look at longevity rather than just flipping. So that was probably for me good learning.
How about you, Joan? Anything particular that comes to mind?
We don't have any major curveball right now. I mean, it's like if you to pinpoint, it will be like some ideas that we have been brewing and we want to actually develop, and then suddenly you see someone else launching the idea. Right? Yeah. So you just have to relook at your plan and see how you can actually make it even better. Right? But I guess this is part and parcel of business development.
Would either of you consider COVID as a curveball? Or was it an opportunity?
I guess for us, it actually is an opportunity for us because it accelerates our online development, right? And I guess it's because it's accelerate our online development, it actually makes us more ready to actually move overseas.
Yeah, for us, I guess opportunity. I guess for a couple of reasons. One is, I shouldn't say hopefully, but phrase it carefully, but if property prices come down as a result, that means our entry cost is better, which we can expand faster. But the other part of it is we've demonstrated to current and future investors that our product is quite durable. So when times are bad, people don't make decisions, they just put stuff into storage and wait and see. You know, they don't expand their house, they don't do the renovation, they just park their stuff in storage. Or, you know, people will go off and start a new business to try and get more income. They need somewhere to keep their stuff as well. So we were able to grow our earnings all the way through this year. which when you're pitching to, well, current investors to put more money in and maybe new investors to come in later, it's a great selling point that, you have a business that's backed by property that's almost resistant to the economic cycle. And I think for a lot of investors, that's quite appealing.
Okay. Please, for the audience, do remember to send in your questions. We've got one from Kalyan. Thanks for the compliment on the shirt. Joan, how did you know your investor doesn't hijack your creative process?
Honestly, it's hard to know, right? That's why it's a lot of times when we actually speak to investors, we are very cautious. We want to know what the portfolio of companies they have invested in to ensure that it's nothing competitive. We want to ensure that, it's like we know who they know in a way to kind of suss out, it's like what kind of people they are. So there are actually a couple of investors that we didn't want to meet because we are afraid that this could happen. But honestly, even though you sign an NDA and etc., it is something that you can't really know or prevent. So you just need to be very careful who you are talking to. Yeah. So far the people that we are talking to are a connection. Is like people we know recommend to us, and we would like to know that people who recommend the investors to us have our is like goodwill in mind to know that they want to protect us, and they will only recommend people they believe will not sabotage us, right? But I think definitely there are a lot of investors out there snooping around, trying to find out what you're doing, and then they could be sharing their portfolio of companies and etc. Yeah.
So there's this, you're on your guard all the time then.
Definitely.
Especially in your space, Joan, because you've got a lot of competitors out there. I mean, how do you view the big brands that are setting up their own sort of chains for selling products? Isn't that an area that's strong for you as well?
We don't really compete with the brands. It's like we see them very differently. For us, right, we provide a platform where parents can easily search for all kinds of products, right? And then we'll recommend the products to them depending on their parenting cycle. We will actually do recommendation through our community, through live streaming, through live videos, and etc. It's very different proposition. Yeah. So and then it's like versus if you talk about a single brand, yeah, it's just different. So as of now, for the parenting space, we don't see anyone that is actually competing with us at scale level yet, right? So we have our unique proposition, and we need to continue to build on that. Yeah.
Okay. There's a question from Spiku on, do you think the VCs and angel investors have less funds to invest by the end of this year? And how much less compared to 2019, if you'd like to hazard a guess? Either of you want to get into that?
I'm more familiar with PE and private equity than venture capital. But from what I know, what I've heard, what I understand is there's still money flowing into these type of funds. A lot of them have raised money over the last couple of years that they need to invest as well. So if money's going out, it's because it's getting invested, I would say, rather than because it's being withdrawn by the end investor.
So it is, I suppose it's hard to tell how much is there, but I guess the money is still there, right? It's being invested.
Yeah.
Joan, any insights on this?
I think money is definitely still there. It's like investors right now are a little bit more, it's not a little bit, it's a lot more cautious, right? They no longer invest in, it's a high burn rate company that try to burn to grow and then just burn off eventually. It's like they're looking for companies that can hit their break-even point or start making profit a lot earlier, right? So because it's like you never know what is going to happen. So there are a lot of companies who has been growing but burning a lot of money, and then it's like we see them dying off during this COVID, right? So I think it's also a waking up moment for a lot of the investors. So I think funds is still there, a lot of money is still there, but it's just they're a little bit they're a lot more cautious in who they choose to invest.
Do you think it'll be harder for startups to invest now? Or would there be specific kinds of businesses and industries that would be more welcomed by investors?
In my opinion, is like from what we hear, from what we see, if the startup are actually working on anything that assists consumers to actually transact online or to actually improve productivity working at home, I think all these solutions are very welcome. And a lot of investors are very interested to actually look at and invest in this kind of technology, right? I think it's also secondary consideration is the founders, right? The management team, whether they have a proven track record of making anything successful, monetizing their solutions. So it's definitely a lot harder, right? So, but it's really is like the ability to monetize the solutions, type of solutions they're offering, whether is it aligned with actually currently what is happening in the climate. Yeah, all these are consideration factors.
So how much more difficult is it for a young person who has a great idea, or he or she thinks it's a great idea, to even get a door open, a crack from an investor to even hear them out? I mean, if they're looking for proven track record and all, you don't have that, right? So
yeah,
what do you recommend for the newbies trying to get into this space?
I don't know. I think it's difficult. Yeah, unless you really come from the Ivy League school. So unfortunately, I think it's like the whole investing world is a little bit unfair. It's like if you come from prestigious school, you come from very well-to-do family, it's like you come from certain privileged group. It's just a lot easier. It's just a lot easier unless you have a lot of connection, right? Otherwise, then but what you can do is you can tap into the government funds. So one thing good is we're in Singapore, and there are a lot of funds, there are a lot of grants that support young startup. So one thing is the accelerator program, that government has launched, and etc. So my advice to very young founders who have no track record and everything is to tap on government funds as much as possible to get them kickstarted.
Okay, that's sort of a bit in line with what Sriku is saying. Young entrepreneurs probably need to cut their teeth with other entrepreneurs or big brand MNCs first, and then do a side hustle. But then you need to know the other entrepreneurs, which is, if you're new, might be a challenge as well, because do the entrepreneurs want to know you, right? It's a case of who needs who more, right? Mike, any thoughts on this, though?
I mean, I guess I agree with Joan in the sense, like, investors see entrepreneurs as having a value. It's a bit unemotional, but if you're a new guy, your value is less. Bottom line, like I said, and like Joan said, if you have, an MBA from Wharton or Kellogg in the US, or you've got some family money coming in with you, but not to say that's the end of the line for you. You just need to get some experience. So in a sense, if you can't get funding, it may be worthwhile, as you referred to, kind of partnering up with other guys in a similar situation. If you have a similar product or compatible product, maybe you guys just form a partnership and then just see how you can get some traction that way. And then as you get experience, and ideally if you have a successful exit, then your personal valuation goes up. You just get more airtime with investors, and you're going to get more money as well. And I think investors like it like that, in a sense, is a bit of dog eat dog. And if you can survive that, if you've got the backbone and the brains and the cunning to survive and come out of it with something of some value, even if it's $100,000 or maybe ideally a bit more than that, that you can then reinvest in the next business, then you're just going to have so much more credibility.
Is it a bit of an elitist society, you think? In the community rather, not society? The investor crowd, I mean, they're looking at your pedigree before they would even consider throwing you a small ball.
I'm not sure it's elitist, but they're risk averse. If you tick a few boxes, then no one's going to blame them for partnering with the wrong person. So I think probably more of an element of that they don't want to get in trouble from their investors because they backed the wrong person. So I think they do have almost like a check the box approach to the people they invest with.
So that's sort of a systemic way of approaching it. But how about the investors who might actually have a gut feel about somebody? Are there many of them out there?
I'm not sure, Joan.
Yeah, I'm not sure. That's a very tough question. I'm not sure. Yeah.
So everything has fallen into a method of operation now.
Yeah.
So it's going to be much more challenging for new startups to get into this space if that's the case.
Yeah.
So
I mean, you're
it's
talking
friends
about
and family money, then that hopefully will
yeah,
start the process.
and government.
And government, yeah. But you got to jump through a fair few hoops for the government as well before you can get anything. And you may not get what you need as well.
Yeah.
So there's always that side of it. Okay, we're almost coming up to time. I just wanted to get from each of you, for the startups out there, for the would-be developers of products and services, what is the one piece of advice you would offer them? Joan, would you like to start that?
Finding the product fit, I think that's very important. I think especially like you just now you mentioned very young startup. I mean, I'm not trying to be discouraging, but I guess it's unless you have a lot of funds supporting you, it might be good to actually have a side hustle first, right? To actually is like demonstrate that the whatever that you're building has a product fit before you go full on. Because it's like if without product fit, it's just a journey. It's just going to be very painful and difficult.
Which is you talk about product fit, but which is more appealing to investors? A physical product or a service or an online sort of platform? Which are they after?
It doesn't matter, right? So it's like whether it's online, whether it's a service, if there's a product fit, you will just see that your business growing, right? Investors want to actually invest in a business that can grow, right? You can see high traction rate of growth, and then it's a 1 year, 2 years, the company becomes this like, you know, a few hundred times larger because it's like they have a product fit. Right, so I think that is important, and it's also something that me and my team has been trying to constantly work around to improve the product fit. But the thing is that when we actually started, we have been profitable because it's whatever we offer, there's some level of product fit, and then we have been able to build our war chest to actually invest into technology development, right? So I guess it's like finding something that fit and then being able to monetize them fast will be very important for any new startup.
Cool, thanks. How about you, Mike? What's your piece of advice?
I think my piece of advice would be, people, especially trying to get funding, need to be a bit of a storyteller. I'm not talking about pretending that Barack Obama is one of your friends, that type of story, but most investors are very good with numbers. You give them the spreadsheet, they can read through it, no problem. You don't need to tell them in month 27 we'll hit break even. What you want to be doing is saying, look, these are the trends that I'm seeing. This is how we're getting ahead of the curve. This is where we are now, and this is where we're going to get to. So you kind of, in a sense, you're a salesperson for your idea. So rather than focusing just on, the numbers obviously need to stack up. You need to know what's going to happen, but you need to, in a sense, sell the song to these guys and make it easy for them to understand the bigger picture. And, they talk about elevator pitches. That's maybe one part of it. But, when you sit down with a guy or girl who's going to invest money with you or might want to invest money with you, they want to know, who you are and how you're going to do whatever it is you're promising them. So that's not a financial conversation typically. That is like, well, this is where we are. This is where we're going to get to, and this is how I'm going to do it.
How important is it to stick with the plan? I mean, sometimes you might be trying to propose something, but something else comes up to, it could be a distraction, it could be a sidetrack, it could be something totally different. Should you stick with your guns, or should you see the potential in something else?
For my investors, you stick to the business plan. If you want to change, you get them on board, get them to agree to it, then you change. I think if management all of a sudden goes off in a different direction to what they told investors, that's where investors start to get alarmed. So if you want them to invest more money, but you're kind of going in a different direction to what they were told originally, you're going to have problems. So, I think you need to have the discipline to follow your business plan, especially if it's working. If you see an opportunity or the business plan, a worthwhile opportunity, or your business plan's not working, then absolutely you need to pivot, but you make sure your investors come with you. You can't get too far ahead of them. Absolutely.
Cool. So it's a journey hand in hand, isn't it?
Mm.
So in this case, yeah.
Yeah.
Joan, Mike, thank you for your insights, your contributions to this process of trying to help would-be startups find investors. I think a lot of very useful advice in there. Don't be too discouraged if you're a new startup or you have people who are willing to start up. Maybe you could all chip in and help it get off the ground first and then see where it goes from there, right? Thanks again to Joan and Mike for that. And thanks to the audience for being there and for the questions. Catch you next week.
Thanks
Thank
very
you.
much.
Thank you.
Thank
Bye.
you. Bye-bye.